Hi, my name is Mark Biernat. I'm a monetary economist, and in this video, I want to talk about the Russian ruble from a technical perspective. I believe this technical perspective is very important because it indicates what's going on behind the scenes in a prognosticating way from a fundamental standpoint. So I believe that technicals are kind of a leading indicator. We're going to take a look at the technical perspective. I'm going to take off my Knut Wicksell hat and put it on my Gordon Gekko hat. And if any of you know, and I've been looking, how to short the Russian ruble, I'd like to know. I want to know how to short the Russian ruble. Maybe I can do it through the Swiss. They'll take anything, I guess, or there's some convoluted way. I'm not recommending it, but I'm just saying, okay, so let's take a look at these technical. First, we're going to look at the technical numbers, and then we're going to talk why it's important, why it's significant, and then we'll end with something interesting. So the SMA, the simple moving average, you could also look at the EMA, but the SMA for 50 days is right now, it's 0.01085, okay? And the 100-day moving average is 0.01107. So you have a moving average of a 100-day and a moving average of a 50-day. And it's below the current price is below. It's 0.01039. Check me on these calculations. I always ask you can check me. I like to be empirically based. The ruble is currently trading below its 50-day moving average, below its 100-day moving average. Actually, it's below its 200-day moving average. Never, ever buy an asset trading below its 200-day moving average, ever. When I was a stockbroker, a lot of people would be get married or, emotionally attached to their stock. It's going down, and they say it's gone down enough. How do you know it's gone down enough? It hasn't gone down enough until it's gone down, plateaued, starts to go stage 1 or stage 2 in an upward direction. That you can get from Stan Weinstein, How to Make Money in a Bull or Bear Market, classic book. I know AI and everything, but the facts don't change. Okay, what about RSI? RSI is 41.22, Relative Strength Index. That's not very good. Market sentiment is bearish. Volatility Index. Volatility Index is probably one of the most key indicators. It's 2.6 on a daily basis, and it's like 14.7 monthly. It's a very volatile currency. It's very erratic. It's like having an erratic pulse. So the technical L's, the technical indicators, especially the SMA, the simple moving average, is telling us we're in a bear market for the ruble, against the US dollar, that is, but also against the Chinese currency, yuan. And the trend is your friend. Don't go against the trend. If you see somebody walking down the street, and you're going to see people walking here, they're probably not going to just turn around and switch impulsively, automatically. That's because they're on a trend. They're going somewhere. There's a reason they're going somewhere. And the moral of the story is trends, and I talk about Gordon Gekko, think about Gordon Gekko, trends always indicate behind the scenes what's happening with the kleptocrats in Russia right now. They're bailing ship. People sell. Think about a stock. No matter how much the boardroom says this is all behind closed doors, some of it gets out, and you start to see movement in the price of a stock or erratic technical indicators. Buy on bad news, sell on good news is the adage, because a technical indicator is by its nature a leading indicator. By the time that it's in the trend, it's in the news, and again, news is the lowest form of knowledge, wisdom being the highest. By the time it's in the news, it's over. It's played out. And right now, the trend is down. If I can short the ruble, you guys let me know again. I'll be very happy. So what does this mean for the Gordon Gekkos of the world? It means, yeah, I want to make money. But it also means that in Russia right now, we have an issue. They're running out, the central bank is running out of currency. Elvira, the central banker, is running out of currency, and they can't support the ruble anymore. Now, under a classical gold standard, when you have a species flow mechanism, the imports and exports should balance out. If you can look at 1870, 1914, or even under Bretton Woods before the U.S. as a quasi-gold standard jettisoned the gold standard when Richard Nixon closed the door on Bretton Woods, we had pretty much parity with international trade. But right now, under a flexible exchange rate, and it's an argument if Russia even has an exchange rate that's flexible, it can't maintain this. Imports, certainly if you go to Russia as a tourist, but who wants to go there, is pretty cheap right now. And then their exports, most of it, 30-40% import-export ratio with China, they all do it in Chinese currency. Well, you say, well, what about the Chinese currency, the yuan? And what about BRICS? What about Evira, who's trying to resurrect this digital currency? Well, it's not going to happen. It doesn't matter because I'm putting on my monetary economist hat right now. As you know, money doesn't matter unless it goes south. Okay, the money will only mess you up. The ideal situation, according to F.A. Hayek, Ludwig von Mises, and if you even go back to Karl Menger, 1870, what is money as a medium of exchange? It's only going to affect in a positive way the economy when it acts as a cipher, when there's barter exchange ratios, when it's as if money doesn't exist and everything's money macroequilibrium. When money doesn't exist, then we have this money macroequilibrium. If not, you have a disruption in the monetary market, which creates systemic effects in the real sector. And that is indicated by the technical indicators right now. So you've got this really sideways monetary system creating shocks in the real sector, but it's also a symptom as a feedback mechanism. And the end result is it's going to hit resistance. Resistance is a psychological number, usually a whole number. In this case, is a penny. It's going to flirt with resistance. It's going to kiss resistance. Then it's going to go under resistance. And based on my model using these indicators and moving averages, by February, and you can mark my word, I can't guarantee it, but it should be 0.0091 February 2025. That's a pretty good strong downward trend, short, long, medium term. And this, again, is an indication of what's going on fundamentally behind Russia, behind the scenes. So that's my message, and the implication is the door is closing. That card cannot be played by Russia, this monetary card. It doesn't matter about BRICS. BRICS, they're being snubbed. They had this pre-BRICS meeting in Moscow, which China, India, and South Africa snubbed the Tsar of Russia. So it doesn't look like that's going to happen. And even if it does, go back, I referenced Karl Menger, 1781, what money is. It doesn't matter. In the United States, we traded Spanish pieces of 8 for a good part as our currency de facto. In fact, that's why the stock market was up until recently quoted in pieces of 8. So the end result is Russia's going down. And it's going to go down hard 2025. My name is Mark Biernot. I'm a monetary economist. Have a great day. Thank you very much.